Welcome to Earnings Central. In this video, we'll break down Leidos Holdings' fourth quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $4.13 billion. The company actually reported revenue of $4.37 billion, surpassing expectations by 5.8%. This quarterly revenue also marked a 9.8% increase compared to the $3.98 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was $2.27. The company actually reported an EPS of $2.37, exceeding expectations by 4.4%. This result also reflects a healthy 19.1% increase compared to the $1.99 per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Let's start with their organic growth, which jumped to 9.7% in the fourth quarter. This robust performance helped push full-year revenue to $16.66 billion, exceeding their prior guidance range by $212 million. The company is clearly firing on all cylinders with growth across every segment. Perhaps most impressive was their book-to-bill ratio of 1.7 for the fourth quarter, their highest ever for a December quarter. CEO Tom Bell highlighted this as particularly significant since Q4 is typically their weakest quarter for bookings. This exceptional performance contributed to a full-year book-to-bill ratio of 1.4, their best since 2020. This booking strength translated directly into an 18% year-over-year backlog growth, providing excellent visibility for future revenues. The quality of these wins appears particularly strong, with many aligned to durable markets and critical customer missions that enjoy bipartisan political support. From a profitability perspective, Leidos achieved an adjusted EBITDA margin of 12.9% for the full year, representing a 210 basis point improvement year over year. This puts them right at the upper end of their guidance and demonstrates their ability to grow profitably while investing in the future. Cash generation has been equally impressive, with free cash flow up 30% compared to 2023, reaching $1.24 billion for the year. This strong cash generation supported $850 million in share repurchases during 2024, significantly exceeding their initial commitment of $500 million. Finally, the company has substantially strengthened its balance sheet, reducing its debt-to-EBITDA ratio to 2.2x, down from 3.4x previously. This improved financial position led S&P to enhance their investment-grade rating to BBB and Moody's to change their outlook to positive, providing greater financial flexibility to support growth initiatives. Now, let's shift focus to some of the key insights and takeaways from the earnings call. Most significantly, Leidos unveiled its North Star 2030 strategy, which focuses on specific growth pillars where customer needs are growing, market profitability is robust, and Leidos' differentiation is evident and accelerating. The full details will be presented at an upcoming Investor Day this summer. A critical revelation is how well the company's strategy aligns with the new administration's priorities. CEO Tom Bell emphasized that the administration's focus on government efficiency, eliminating regulations, streamlining procurement, and moving to outcome-based contracting directly aligns with Leidos' mission to make government smarter and more efficient. IT modernization represents a major opportunity, with Bell describing it as low-hanging fruit for government efficiency. Leidos is the leading provider of IT software solutions for the federal government and has a proven track record of modernizing complex IT environments. Their Defense Enclave Services program offers substantial growth potential, as only 3 of 14 defense agencies have been migrated so far. The company is also making significant breakthroughs in maritime autonomy, developing unmanned underwater and surface vehicles at dramatically lower costs and timeframes than traditional approaches. For example, they developed an unmanned surface vehicle called Archer in less than 9 months, equipped with a modular mission bay that can be adapted for various missions. Their partnership with the Veterans Administration demonstrates their success in public-private healthcare delivery. By establishing a network of first-class medical and mobile clinics, they've increased veteran throughput by more than 300% and have average exam times while consistently exceeding quality of care targets. Looking forward, Leidos has significant momentum in their pipeline, with $8.3 billion of proposals submitted in the quarter and $25.6 billion of bids awaiting adjudication. For 2025, they're guiding to revenues between $16.9 billion and $17.3 billion, reflecting growth of up to 4%, with adjusted EBITDA margin expected in the mid to high 12% range. CEO Bell expressed particular optimism about opportunities related to the administration's focus on border security and the Iron Dome initiative. Leidos has significant capabilities in these areas, from space surveillance to counter-effects for incoming cruise missiles and hypersonic weapons. That wraps up our recap of Leidos Holdings' fourth quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.